This comes after we've had stories that Bloomberg News reported that Brian brought all his managers together, said you've got to generate revenue. So what's going on here?
Yeah, he's trying to get their advisory business, the Merrill Lynch side, to cross-sell products, the mortgage business to try to cross-sell Merrill Lynch advisory services. And this is a buzzword in the industry. Jamie Dimon at JP Morgan is very big on this. That's why they say you need these banks that can do all things, because you can cross-sell products and generate extra revenue because you don't have to work as hard to get the customer in the door when they're already a customer of, like, the mortgage bank, or say if they are already a Merrill Lynch customer, maybe they can get their mortgage, and then you increase.
Right, it makes sense.
Yeah, the per customer profit is much higher if you can sell them multiple products.
So what's going on then?
So revenue is under a tremendous amount of pressure at Bank of America. It has fallen every year since Moynihan has been in his position as CEO, and so he is really trying to get revenue up there. You've got a lot of regulatory pressure coming in. They're not making as much money on mortgages, obviously, this quarter. They're not making as much money on debit cards, on credit cards. There's a lot of pressure from Washington that has cut their fee income. And so you're seeing that in the bottom line right now. You're seeing that translate. All bank earnings this quarter have been fairly lackluster. You've got pressure from the Federal Reserve on interest rates. Profit margins are squeezing. And so Moynihan, in particular, has a very ugly turnaround story. Countrywide was a huge mess when he took over the bank. So he's charged off $40 billion in bad mortgages since he's been CEO. And so he's got an ugly turnaround story in addition to a very weak environment.
So Dawn, what will change this? What will change the situation at Bank of America?
Well, he's looking to Merrill Lynch as a bright spot. If it weren't for Merrill Lynch, the earnings would be very ugly this quarter. I'm looking right now. Investment banking fees were $1.5 billion, up from $1.2 billion. That's a very nice pop for Merrill Lynch. And so I believe advisory income was up as well. So if he didn't have Merrill Lynch, it would be a very bad quarter for Bank of America. He's looking to build off that brand because mortgages aren't growing. There are a lot of regulations that are coming down the pike for banks regarding mortgages. And I just spoke with Chris Whalen not too long ago, and he predicts that a lot of the big lenders are going to be getting out of mortgages. Jamie Dimon at JP Morgan has said that they aren't going to necessarily hold as many mortgages on balance sheet because there's no incentive. They're penalized from a capital standpoint. The profits aren't there. And so Moynihan needs to diversify his business, especially the consumer business, and he's looking to Merrill Lynch as that avenue.